Lab 7 is a bank reconciliation from Chapter 7. This is the main thing that you'll be responsible for in the exam for Chapter 7. All right, so remember for a bank reconciliation, you have the balance per bank on one side and the balance per books on the other. All right, so we've got the first one, the bank statement shows an ending balance of $34.81, so we've done that one. On August 31st, the bank statement shows charges of $35 for the service charge. All right, so that's going to come out on the book side. So I'm going to say minus the service charge. You can also group these if you want to. I'm not going to worry about it. But you could do like your additions all in one spot and your deductions all in one spot. I'm just going to put them as I run into them. All right, on August 28th, the bank statement shows a return item of $110 plus a related bank fee of $10. The return is a customer's check that was returned because of insufficient funds. All right, so that's an NSF check from a customer. And then also a bank fee. All right, so minus 100 and minus 10. All right, the bank statement shows a charge of $80 for check printing. So I'm gonna put check charge, check printing charge. That was minus 80. The bank statement shows that $8 was added to the checking account for interest earned. So plus interest earned on the book side. The bank statement shows that a note of notes receivable of $1,000 was collected by the bank on August 29th and was deposited in the company's account. On the same day, the bank withdrew $40 from the company's account as a fee for collecting the note receivable. All right, so they collected a note for me. So I'm going to add that to my book balance. But then there was another bank charge coming out for $40. All right, the company's cash account showed a balance of $967, so that goes up here at the top. And then during the month of August, the company wrote checks totaling more than $50,000. As of August 31st, 3,021 of the checks written in August had not yet cleared, and 200 written in June had not yet cleared. All right, so over here on the balance per bank side, we're going to add deposits in transit. For some reason, I am a little more organized on this side, and we're going to subtract outstanding checks. All right, so we have from August, we have 3,021, and from June, we have 200. From June or July? From June. All right, and then the $1,450 cash received by the company on August 31st was recorded in the company's books. However, it was deposited in at the bank on the morning of September 1st. So that's a deposit in transit. All right, and then you add everything up. And hopefully when you're done, it will all balance out. So I get 1710 on this side. And I get 1710 on this side. All right, and this is our adjusted balance. All right, now, anything that we did on the book side, I have to actually make the balance per the books equal 1710 as of that date. So I need to make an adjusting entry for these accounts. All right, so I'm out of room, so I'm gonna switch over here to this. All right, so I've got a couple here that are service charges. What I'm actually going to do is add them up and make them one journal entry. So the service charge, the bank fee here, and the bank charge here, I'm going to do all in one entry. All right, the NSF check is going to be another entry. The check printing charge is another one. Interest earned will be my fourth one, and my note will be the fifth one. Okay, so for the first one, I'm gonna have like bank expense or something along those lines. And cash is gonna be credited because they took cash out of my account. All right, and I'm just gonna add them up. 35, 45, 85. So that's $85. All right, the second entry was an NSF check. All right, this is where a customer paid us and their check bounced, so they still owe us. So since they owe us, I'm gonna put that into accounts receivable. And then it also comes out of cash. All right, the third entry was a check printing charge. So I'm gonna call that office supplies expense. For 80, and then out of cash. The fourth one I think was the interest that they earned. So that would be a debit to cash because my cash went up, and I would credit interest revenue for the $8. And then finally, they collected a notes receivable for me. All right, so when the note is collected, I receive the cash, and I would credit note receivable. All right, they only told us $1,000. They didn't tell us anything about interest. But if we happen to have also collected interest with it, I would also credit interest revenue. All right, in this case, they didn't have it. Anyway, make sure you complete this and upload it.